When I started in this industry 13 years ago, there were no teachers, there were no mentors.
I am the author of the best-selling Tools and Tactics for the Master Day Trader. I'm also co-founder of Pristine.com, which today is considered to be the premier educational resource for active self-directed traders. Pristine.com, of course, was formed about 7 years ago in my basement apartment with one client. Today, 7 years later, Pristine has a worldwide following of 88,000.
Señor Oliver Velez, bienvenido a Colombia, de Noticias Caracol, y gracias por estar con nosotros. Cuéntenos, por favor, en qué consiste el método Trade for Living que usted creó y que ha sido tan exitoso a nivel mundial.
4.5 years ago,
Hace 4 años y medio, vi que uno de los mayores problemas que los corredores de bolsa tenían era la falta de entrenamiento y un monto apropiado de capital. Lo que hice fue crear un programa que se llama Trade for Life, que le permite a los corredores tener continuo entrenamiento cada día con fondos que yo proveo, por lo cual se elimina el miedo a perder mucho capital.
We're talking about trading tips today with Oliver Velez.
We've experienced obviously one of the most volatile months in years. I don't believe we've experienced this level of volatility since, 2008, 2009.
The greatest event of markets and trading in Spain. Oliver Velez, a legend of the trading. He is also known as the rock star, the messiah of the trading.
Believe it or not, that name, the messiah of trading, came from a quote by the Dow Jones. The Dow Jones calls me the messiah of trading all the way back in the year 2000.
Hi from Orlando, Florida. I'm Adrian Manns for the Money Show Video Network. I'm here today with an old friend of mine, Oliver Velez. I've known you since, 1997. Wow. Back when you were doing some heavy-duty trader education for new guys getting into the business. The latest is iFund Traders.
I've been training and educating traders since 1994. In 2007, when I was one of the first people in the industry to actually risk my own capital on my students.
All right, traders. All right, enough of that. Welcome to another live masterclass with Oliver Velez. Of course, my name is Oliver Velez, and I'm extraordinarily happy that you are here. I have something very special to share with you today, something that has been very, very dear to my heart for a very long time. I want to talk to you about something that has contributed to a big part of my financial success over several decades. And we're going to delve into that today. So listen, guys, thank you very much. And thank you, traders, for those of you who actually know who I am, who've seen basically the highlights from my past, you know my history. I know that each time I do this, I have to put some traders through that history again, but please understand that every single event I do, there are hundreds and hundreds of new people who have absolutely no idea who I am. what my pedigree is in this space. And so to save me from having to blab about that over and over again, I just show you highlights from my past, guys. I have been involved in financial markets since March of 1981, landed my first professional trading job on Wall Street in December of 1986. Built a very, very strong career on Wall Street, built a name for myself, which led me to start my own firm in 1994, which catered to almost all of the Wall Street firms. Got ranked #1 by Barron's in the United States, had the second largest direct access brokerage firm in the United States, had the largest number of traders under training in the entire history. So it goes on and on and on, guys. But what a lot of people actually don't realize is that one of the key styles of market play for me for many years was what I call today, or what many people call today, swing trading. Now, a lot of people have sort of associated me more with short-term oriented income-based day trading, or micro trading, if you will. But I was considered the king of swing trading all the way back in the early 1990s. And in an interview in the early 1990s, I was being interviewed by Bloomberg about this unique style of market play, this unique style that sat between two dominant styles of market play. And I was recognized as having popularized this approach to the markets. And the interviewer, after explaining this style of market play, guys, the interviewer said, well, I guess if it ain't got that swing, that's what you're saying, Oliver? And it clicked. And from that interview, I started referring to this style of market play as swing trading. Now, if you want to do something really interesting, you can go on Google, it's like Oliver Velez swing trading, and you can look back at all of some of the work I've done on the topic of swing trading all the way back to the beginning of the 1990s. So yes, I'm sort of like the godfather of swing trading. I helped to popularize the approach. And I want to talk a little bit more in detail about that as we delve into this, because today everyone has sort of like their own unique definition of what swing trading might be to them. So I want us to define that. I want you to understand where it fits and why I believe this is the approach or style of market play that is universally acceptable and it's universally viable for every type of market player. It sits perfectly in between all of the other styles. All right. So listen, guys, grab the beverage of your choice. All right. Grab something to take notes with. I will really want you to take notes with this. I promise you, and I do this every single talk I have, I promise that by the end of this presentation, you will have something of value that you will be able to use every single day forever, right? That is my promise to you. That is the vow that I make every single time I'm afforded the opportunity to speak to you in front of a mic, on stage, at a podium, in an event. It doesn't matter. But that is my promise to you, all right? But you should take notes. All right, so whether you decide to join my family or be a part of me, you will walk away with something that I believe will benefit your trading life for the rest of your living days. All right? And I'm going to ask you at the end of this presentation whether I've delivered on that, okay? All right, so guys, get ready. All right, let's go. Let's go. Let's go. All right? Okay, now I am not going to bore you with anything regarding my background. Many of you watched the introductory video. I gave you some highlights even after that, all right? I have been written up in virtually every single financial periodical out there. I continue to be one of the most sought after speakers on the topic of trading markets for a living all over the world. I do I do anywhere from 19 to 25 professional speaking obligations every single year for the institutional space. I'm the author of 5 best-selling international books written in 5 different languages on the topic, and you can follow me here. All right? Now, I want us to first talk about trading styles, okay? Now, what's really in defining your particular style. Now listen, traders, every trader, and excuse the glasses, guys, the lights sort of affect headaches and migraines sometimes, so whenever I'm in a setup and there's a lot of lights, I have to kind of dim that with shades, so I hope that doesn't distract you. I apologize about that. All right. Occupational hazard, looking at screens my entire life. All right, that's where it comes from. All right, trading styles. A lot of traders, a lot of people, or a lot of novices flopping around in the markets today have no idea that there are unique styles, and the traders who do best actually lean toward a style that is more in tune with their personality and some of their characteristics as an individual. And so every trader has this one style. They might do multiple style trading, but they have this one style that is more in line with who they are, more in line with their psychological and emotional makeup. Now, a lot of traders don't even understand that there are multiple styles of market play. They kind of group everything into 2 categories, an investor or a trader. Those categories are too broad, all right? So in essence, there are 4 unique approaches to the market. There's investing. That's a long-term market play. But let's take investing out of the equation here. Let's talk about trading. Now, trading falls into 3 broad categories if we remove investing. This is what I want to talk to you about, and I want to show you how this style fits perfectly in between the 2. Now, the 2 broader styles, but check this out. So defining your style. These 3 broad trading styles are simple. They're broad, but they're also simple. There's day trading. Now, this day trading style is what has become extraordinarily popular, all right, today. It is one of the largest group of market participants in the market almost on a day-to-day basis. They may not have the greatest amount of money to deploy in the markets, but in terms of sheer numbers, one of the largest groups of market participants, if not the largest today, they're day traders. Now, these are trades that are taken and usually they're entered and usually closed out before the day's end. That's what we mean by day trading. And in many cases, it goes to a form of micro trading, all right? Anywhere from holding a trade anywhere from 8 minutes to 16 minutes to 20 minutes, okay? Now, this is an income approach to the markets, okay? This is an income approach to the markets. Very important to understand. Only income. Now, I want to skip day trading and go straight to core trading. Core trading is on the opposite end. If we take investing out of the equation, this is the opposite bookend to day trading, if you will. All right? Core trading are trades that are held for weeks to several months. This is when you're trying to take the core of the core of a macro move out of a financial item. You're not trying to capture the entire macro move. That's more investing. But core trading is a slightly smaller variety or form of investing where you just want the sweet spot of the macro move, not all of the macro move. And this is a very unique approach to the markets as well. It's something that we apply in my wealth approach to the markets. It's more core trading. But, so you've got this day trading for income. This is where your income comes from. Core trading is more of where our wealth comes from. We want the sweet spot of bigger, more macro moves. And then there's swing trading. There's that special form or style that I popularized all the way back in the early 1990s, a style that gained me great popularity, not on Wall Street, but over the years in the general public at large. This is the style I began to be known for in the 1990s. It's the one that some of the top selling videos were based on, and some of the top selling books were based on. My approach, which became dubbed as swing trading. Now, why did I always regard this style as very special? Because it sat so perfectly between the income approach to trading and the investment approach to trading. I want you to understand this very carefully. The two largest groups of market participants are day traders for income and core trading investing for wealth. All right? So you have these two elephants in the room, if you will. These elephants are battling for two different things. The income approach, the income elephant is battling for income. The core and investing elephant, they're battling for wealth. They're in the same pond, but they have different objectives. The swing trader is actually the they're the smallest group that's largely ignored by the income producers and the wealth producers. They're almost invisible. They're not seen. They're not focused on. And therefore, they can operate with less friction. They can operate between these two elephants and marry both of their benefits. This is why I've always regarded swing trading as one of the best approaches to the market, because this is one of the reasons, because it borrows from the income approach. It incorporates income into its style. It also borrows from wealth. And so the swing trader has the ability to capture bigger gains than the income producer, the day trader, because the moves are bigger and over a slightly longer period of time. In addition to that, people, the swing trader can actually benefit from some wealth without the cost of a lot of time. So the wealth approach requires, the cost for that wealth is time, 2 years, 18 months. But the swing trader has a shorter period of time, can grab some portion of wealth over a shorter period of time, while also benefiting from an income approach with slightly longer time. So it is that style that sits perfectly between these two large dominant groups. And as a result of the group being the smallest, it has the least competition. It is the period in the market that it has the least amount of friction, and it's in the least amount of competition, which leads to the greatest opportunities. All right? And so this pocket is something that I believe should not be ignored, this swing trading pocket. Now, I'm a believer that traders should have multiple approaches to the market. You should have all the styles under your belt if you truly want to maximize everything. But if there were one that I believe is universal across all traders, that is this one. Okay? This one does not require some of the things that an investor requires and the day trader requires. This is something that every single person can actually do. Everyone may not be able to be an investor. We may not even have the capital to do that. Everyone may not be able to be a day trader, but everyone has the capability of being a swing trader. And we'll talk about that in a little more in detail in just a moment here. All right? So we're going to focus on this middle style today, which in general It can be shorter, it can be a little bit longer, but generally speaking, we're talking about trades that last anywhere from 2 to 10 days. All right? Most of them occur on the shorter end, 2 days, 3 days, some every now and then just 1 day, but you're usually in that 2-3 day sweet spot with the vast majority of your swing trades. Now, let's talk about the benefits of why I believe that swing trading is today best applied to the Forex market. You see, guys, when I started trading, the Forex market was not available to me. In the 1980s, there was no Forex market for individuals. Even in the 1990s, there was no Forex market for individuals. This came in the 2000s, and in the latter part of the 2000s, you have to understand that this market was exclusive to central banks, countries, very, very large institutions, all right, government-based dealers, debt dealers, and things of that nature that worked primarily for governments. This was not a market that was accessible to the average individual, okay? And so this became a market much later in my career that became accessible. All right, so I did primarily all of my swing trading on the equity market, but the equity market had some issues that the Forex market doesn't have. And so let me explain to you why I believe that this style is best applied to Forex. Not that you can't apply it to other markets, but it's best on Forex, and I'll explain to you why. All right? Now, the top benefits of swing trading on Forex. First of all, the Forex market is the most liquid market in the world. One of the issues I had sometimes with swing trading certain stocks was the lack of liquidity, especially if I was swing trading with size. Some of the plays just simply did not have the liquidity to get out or even in on a dime. The liquidity in terms of a market is a zero concern with Forex. We're talking about the most liquid market in the world. The other problem I had with swing trading equities is that every single day the market closed at 4 p.m. Eastern Standard Time, and I would have to hope that the following day, that when the market opened, the stock that I was swing trading was not going to be gapping down or up against me. All right? And so it was a nail-biting night every single night holding a sizable swing trade because as time went along, guys, gaps became more prevalent in the market. You see, when I started trading in the 1980s, gaps were a rare phenomenon. Stocks barely gapped. When a stock gapped up or down, you actually sat around the water cooler with a fellow trader and were like, wow, did you see WXYZ? Did you see that thing gap today? Oh my God, what was the reason for that? It was that rare. Today, almost every single thing, every key stock is gapping up or down by some amount, and on some days by gargantuan amounts. This adds an uncontrollable risk to swing trading when it comes to holding equities overnight that Forex doesn't have. Why? Because for 6 days, it's 24 hours a day. All right? The only reason why these gaps are occurring on the equity market is because there's an artificial stoppage of the activity, and that pent-up activity that really wants to take place overnight can't take place, and boom, that pent-up demand or that pent-up supply that gets built up overnight reflects itself in terms of a different price. If the equity market traded 24 hours, it would trade to these prices versus gap to these prices. And that's what we have in the Forex market, okay? All right. So 24-hour trading eliminates most of the gap risk when it comes to this style. This is another reason why I believe that swing trading is best applied in the Forex market. All right? Because of this 24-hour trading, it makes this style and this market applicable to almost every human being. You see, when I started trading, I had to make a choice. I could not try to become a professional, successful trader and also have a job to help support me during my developmental period. No trader starts off profitable. So there's a learning curve. There's a developmental period where you are going to lose. And it would be great if you could actually support that period with another income source, a job, if you will, and work on your trading. I could not do that. The markets open at 9:30 Eastern time every single day, New York time, all right, and close at 4. Those are key working hours. I could not support myself while trying to develop myself as a trader in the markets. I had to make a choice. I'm either going to be a professional trader and work on this and have to deal with losing first without any other source of income, or I'm not going to do this. But today, that choice is not necessary because of the Forex market, open 24 hours. Because, all right, this style of market play does not require that you sit in front of a computer and watch every single tick developing blurry eyes and bad bladders because you're afraid to get up and use the restroom. All right? And so because the market's open 24 hours, because this style is over 2-3 days holding period, it's a style that even if you have a job, you can you can deploy, you can develop as a professional swing trader and not give up other sources of income, not have to make the choice of, do I quit my job and do this exclusively, or can I keep my job and do this as well? This style applies to part-time traders, full-time traders, nighttime traders, daytime traders, afternoon traders. It's more global. It's the most universal of all the styles of market play. Now, in addition to that, there's no licensing requirement, people. All right? Many of my professional traders who trade my capital, they have to actually get a license. And a license from the SEC, the Securities and Exchange Commission. They have to get a trader's license. They have to pass a very long, very difficult exam. Many traders fail this exam. In the Forex market, there is no licensing requirement. So I can have traders trade my capital with no need for them to pass a test. That barrier to entry is not there in this market. In addition to that, trading action happens with higher consistency and fluidity. So when the Forex market runs, it really runs, people. All right? That is one thing. It has flow. It doesn't always have flow, but when it does, it can run and run and run. And so I do find that there is this tendency for higher consistency and greater running fluidity in this market. All right? In addition to that, there are fewer items to trade. Now, this is a big one. Some people might consider this, people, like a negative. Well, Oliver, there's fewer items to trade? Absolutely. One of the things I battle with traders all the time with is stop thinking that the entire market is your world to play in. That's not your oyster, the entire market. All right? You must carve out your own small market to specialize in. So in the equity market, I tell traders, look, there are several hundred key stocks to choose from, but you should narrow down to 6 to 10 that you focus on every single day of your life. You don't look at 200 stocks. You don't look at 300 stocks. And fighting with them to narrow their world, to become an expert, to become like a market maker in a small number of stocks, to become like a specialist in a small number of stocks is the key. And I fight with them all the time because they want to expand. But no, the professional contracts their worlds. Okay? A NASDAQ market maker trades 2 things, 3 things their whole career. A New York Stock Exchange specialist trades 1 stock their whole career. The novice trades hundreds of stocks a week. All right, which end of the spectrum do you want to be on? So with that being said, The professional narrows their world and becomes a specialist in that narrowed world. Well, the Forex market does that for you. There's only a small number of pairs available for trading, forcing you to be a specialist. And that's another thing I like about this market. Fewer items to trade, greater focus, no distractions. All right, we talked about the no gap risk due to the 24-hour trading, and we also touched upon the more relaxed trading style. Why? Because when you're trading in a day trading form, right? You're trading in a day trading form, people. You can't miss a beat. Every moment matters, okay? When you are swing trading, every moment doesn't matter. You can run an errand in the middle of your trade. You can be at work while your trade is on. There is no need to follow every single tick, to watch every single moment. It's a more sane, in a way, more relaxed form of market play, which is another reason why it is more applicable to a larger number of people, even though this style has the smallest number of participants. But in truth, it's the style that is most appropriate for everyone. Okay? Some people might naturally be a better swing trader because that removal of the need to be so focused on the screen actually makes them better for some. That not needing to make their decisions in such a precise, quick second, every second, you have to make the correct decision in this second, where there's more of a relaxed, more general need to make an action, but it's not so precise. Some people just operate better under those circumstances. Okay. Now, I want to talk to you about, I want to demonstrate why I call this swing in the first place. And it speaks to what I teach my traders to do, which is to grab a whale. Now, what I call a whale is made up of two things. Well, three things. It's made up of a leg one move. So here's the leg one move. Boom. Then there's a pullback, a brief pullback. And then there's the up move continues in a leg two move. Okay? Now, what I teach my short-term oriented equity traders to do is I teach them how to grab the entire whale. We play legs 1 and 2. Now, by stretching the time out, not to minutes, but to hours to days, we're going to swing now. Because the time is longer, we don't need 1 and 2 to make up the full trade. We just need one leg. One leg is what we're after. So one part of the whale, one swing, swing 1, swing 2. Okay? These are separate trades in the world of swing trading, and this is one trade in the world of day trading. Okay? That's the main difference I want to demonstrate for you. Okay? One leg is one swing. One swing. In the micro world, this is one trade. Okay? That's the main difference. Now, the idea is, I do this a different color to make it easier, is to grab each swing that a Forex pair delivers. That's on the long side. And on the short side, we want one swing down, in and out, another swing down, in and out. So the goal, people, is to not experience any setback of any importance. Okay? I'm not talking about wiggles and jiggles, but we're bypassing setbacks in the swing trading approach. We want fluidity in the trade and out, fluidity in the swing and out. We don't let the item release on us. The pullback is called a release sometimes. We bypass the release. We sidestep the setback. We omit the pullback. Okay? And just go for the swing. If it ain't got that swing, we're not involved. Okay? We need that swing. All right? So that's the general approach. Swing out. Next swing out. Swing to the downside, out. All right? We're catching legs or swings, but not allowing the stock to give back after the swing. Okay, good. You know that. Now, let's keep going. This is going to get real interesting for you guys. Understanding currency pairs. I have to go over this before we start looking at charts and showing you swing trades and how to deploy them. All right? Understanding currency Forex pair trading. Very quickly, guys, a currency pair is just an exchange rate between two different currencies. So you'll always see a Forex trading pair comprised of two different currencies. And the one you're looking at here is the euro. There are two base currencies, and the US dollar. Now, the easiest way to think about this is that you're purchasing euro with the US dollar. Okay, it's the exchange rate for purchasing euros. You're buying the lead currency with the trailing currency. I am buying euros with dollars. This is what this pair signifies. You're going long euros and you're selling US dollars to do it, which obviously means that you believe when you buy this pair that the euro will be stronger than the dollar. Okay? All right, so as I said, in Forex trading, all currencies are traded in pairs because when you buy one currency, you are simultaneously selling another currency. So when I am buying euro, I am selling US dollars to buy the euro. All right? Always remember that. Same thing with, for instance, Bitcoin. When you see Bitcoin, BTC, USD, T or whatever, you are selling dollars to buy Bitcoin. That's the exchange rate for switching dollars into Bitcoin. The lead symbol is what you're buying, what you're going long. The second symbol is what you're selling. Okay? Very important to understand. That's how you look at currency pairs and cryptocurrency pairs as well. All right? Because they're currencies as well, supposedly. All right. Now, the Euro-USD pair, the Euro-dollar pair, is the most traded Forex pair in the world. It has 23% of the market. So this is a big one right here. This is a big one. Now, these are the most popular currency pairs in the world. All right? I just told you the biggest and most popular one is the Euro-dollar. All right? You've got the dollar-yen. That's where the Japanese sell their weak-ass currency for the dollar. Okay? And you have the dollar, the pound dollar. That's where you're selling dollars to go long the British pound, and so forth and so on. Then you have the Australian dollar, the dollar Swiss franc, and the dollar, the US CAD pair. That's where it's the Canadian dollar and the US dollar pair. These are the top 6, and these are where you're going to mine. You're going to mine your swing trades from these 6 pairs. Now, remember when I told you that I try to get my traders to take the NASDAQ 100, the S&P 100, there's some overlap there, narrow that list down to 6 to 10. And this becomes your market. Your market is, I tell them, your market's not the NASDAQ 100. Your market is not the S&P 500 or the S&P 100. Your market is not the Dow Jones 30 stocks. Your market is a carefully selected 6 to 10 things from those broader markets. You create your own market made up of 6 to 10 things. And this is where you live your life. In those 6 to 10 things. You become a specialist. You become an expert. Those 6 to 10 things. All right? Well, these are the 6 things you become an expert with. The Forex market does it for you. There's no need to select. You can, of course, have a favorite one, but we've got the 6 right here. Okay? This is where we're going to mine our swing trades from these pairs. Now, these pairs collectively account for 60% of all global currency trading. You don't really need any others, to be honest. Okay, now let's get to the things that we need to deploy swing trading on those 6 pairs. What are the tools that we need? We've got the pairs now, but what are the tools that we need? Well, we're going to use for swing trading, we're going to use the hourly chart predominantly and the 4-hour chart. Now, I'm going to focus today mostly on the hourly chart because it's the hourly chart where you get that 2-day sweet spot swing opportunity, that 2-day, sometimes 3-day sweet spot. Now, remember, guys, swing trading is really, I would say on average, it's 2 to 10 days, but there's a sweet spot here that really is like 80% of your trades are 2 to 3 days. So I would say 80% fall here, 2 to 3 days. And the other 20% are 4 to 10 days. All right, so let me try to do that a little better. So I would say 2, 3, 4, 5 through 10, right? So your sweet spot is here. This is going to be about, I would say about 80%, so the 80-20 rule, and 20% are going to be longer. Okay? Now, these longer trades can be mega wins, just so you know. These are some of your mega wins. All right? And so as you get into the 20%, you're closer to wealth, producing wealth, big money. And this is closer to income with a little kick. It's income with a kick, guys. I would say income plus. All right? Income is really day trading, but you're going to make bigger gains than a day trader in this pocket here, this 2 to 3 day pocket. The moves are bigger. They're more pronounced. So it's income plus. Income with a kick, plus you have this wealth aspect to swing trading when you get the trades that last 4, 5 days into 10 days sometimes. That's that wealth component. And this is why I was telling you that swing trading marries both income and a portion of wealth together, all inside of one approach. All right? Now, in all honesty, when you trade off of the 4-hour chart, you will get more of this. If you trade off of the hourly chart, you will get more of this. So you want to do both of them. You want to take trades based on the hourly chart as well as some trades based on the 4-hour chart. You're going to look for the same events that I'm going to teach you today. Just when they show up on the hourly, you take them on the hourly and know that it's likely to be in this pocket. When you see these same events occur on the 4-hour chart, you're more likely to slip into this group here. Okay? Now, I am going to focus predominantly today with you on the hourly chart because it is going to represent 80% of what you do. All right? But understand that everything I teach you is applicable on the 4-hour chart as well. We're going to take these charts and we're going to superimpose the 20 and the 200 period moving average on them. Okay? We will never look at these charts without these two moving averages. They're simple in nature. 20 period simple moving average, 200 period simple moving average. Then I need you to have the knowledge of igniting and rebound concepts. Another word I use for rebound is simply pullbacks. So you'll see me use this interchangeably, okay? Pullbacks. Rebound is pullbacks. Rebounds are pullbacks. So igniting and pullbacks, or igniting and rebound plays, all right? I'm giving you this knowledge today, all right? You will walk away knowing igniting and rebound plays so that you, starting Monday, can start applying igniting and rebound swing plays on anything that moves, even equities if you like. We're focusing on Forex, but you'll be able to do it on equities as well if you like. All right. So let's go. Are you ready? Guys, give me a second here. We've got the introductory stuff out of the way. All right? Why Forex, what swing trading is, where it fits in the grand scheme of things, what your time frames are for 80%, 1 hour, more than 20% 4 hour. We know the items on the chart. We know how to read a pair. One is purchasing the other. We have the 6 items we're going to mine swing tradings from. That's all the introductory foundation stuff in place. Now we're going to get down to business, where I teach you how to take these tools and how to mine money from the market in a very simple but powerful way. Now, are you ready for this? This is where I really need you focused. I need you taking notes, okay? I need you locked in. Let me know. I'm not going to move until you tell me you're ready. Ready for this? All right, this is the meat, okay? This is the meat, people. Let me know you're ready. You're ready. Good. Okay. Okay. Wish I could see your note-taking things here. All right. Let's go. Get these back up here. Yes. All right. Okay. Swing trading long. I told you that your 2 main swing trading opportunities are going to be what I call igniting swings and pullback or rebound swings. Okay? What I'm demonstrating here for you, right here on this image, is both of those trades. The igniting trade happens here. This is the igniting trade. The igniting trade, swing trade. This one is your pullback trade. Okay? Now, I want you to look at this image carefully. I also want you to look at the moving averages carefully. Now, your igniting swing trades will tend to come out of a sleepy period where your pair was going sideways. Many of you know this concept. And boom, something ignites to propel. The pair ignites itself, propelling itself out of the sleepy zone. This sleepy zone often will have your moving averages. Do this again. Will often have your moving averages relatively flat. Like that. Okay? Boom! Now, this sleepy zone can oftentimes, guys, come, watch this. This sleepy zone will sometimes ignite off of like the 200. That's very beautiful. But sometimes it will ignite off of a 20. Like this. It'll drift toward a 20 like that. And boom, ignite off the 20. So sometimes you'll ignite off the 200. Sometimes you'll ignite off the 20. Okay? Now, a lot of times this igniting swing play will morph into the second swing play. So you'll get the igniting out of the sleepy zone, ignite, and I want you to grab that igniting play, boom. All right? And the second play will often be a pullback play. The pullback play often occurs after an igniting play. You get the igniting play first, not all the time, but a lot of times. You get the igniting play first, and then the pullback play happens second. Now, if this pullback play, guys, here's the igniting play, and here is your pullback play. Okay? Now, if this pullback play happens earlier, like this, let me draw it for you. Igniting play. You will, here's the first pullback. If it's close, I want you to take them both. Boom. Boom. So it will be more of an add to your existing swing trade. If it is far apart, it's a second trade. That's all I'm saying. So sometimes you can get that pullback really fast, and I want you to add to the pullback and igniting off the 20 or off your a key moving average. But if it's separated, you will be out of one trade, and this will ignite the second trade. That's all I'm trying to say to you. So, if it's apart, it's trade 1 and trade 2. If this is closer, it's 1A and 1B. Okay? I hope you understand that. And we'll look at a lot of examples. Now, the formula, so you got part of the formula down. What you're going to do is if you get an igniting, if you get an igniting, your stop can go under everything, including the moving averages, including the sleepy period. You can put your stop under the sleepy period, under the moving averages, what have you, or you can actually just put the stop under the igniting event. The whatever event is igniting out of the sleepy period, you do not want the market to take that away. Boom. So if you want to give it a little bit more room, put the stop under everything. Put it under the sleepy period, under the moving averages, everything if you can. If you want a little tighter, put it under the igniting bar. Now, your goal is to jump into the igniting bar, or if you miss it, to jump into the next bar that clears the high of the igniting bar. Now remember, I'm going to focus on a 1 hour, so we're talking about a 1 hour bar. You're diving into the 1 hour bar sometime in the second half of the 1 hour bar. So in the latter 30 minutes of the one hour bar, you want to make sure that it's not just a quick igniting bar and then it falls all the way back the rest of the hour. So the latter part of the hourly bar, you dive into the hourly bar, stop goes under everything or under that hourly bar if you want it to be tighter. Okay? That's how you take advantage of the igniting buy. The pullback buy is simply a color change. So let me try to demonstrate this for you. All right? Your pair is dropping, 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 and here's that 20, let's say, drop, and boom. The color change. You changed from red to green right there. Boom, there's your entry. The moment a green takes out a red at or near the 20-period moving average, that's your pullback swing opportunity. Now, the best, listen to me carefully here. These are note-taking points. The best pullback buys, the best ones, not the only ones, the best ones occur after an igniting buy. So an igniting event out of a sleepy range, igniting out of a sleepy range, followed by a pullback event. That pullback event is those are your best ones. If they are preceded by an igniting event from a sleepy range. Okay? Simple but powerful, guys. Do not confuse the simplicity for lack of power. So we've got igniting and color change event, right? Igniting and color change pullback event. Okay? Stop here is under everything or under the igniting bar. Stop here is under the pullback. Right? So wherever the pullback is, look, pullback, boom. Buy, stop, under the pullback, under the V. Okay? This is under the base or under the bar. This is under the pullback, under the V. Okay, so again, you're buying into the igniting bar. It's a 1 hour bar. You're buying into the igniting bar, preferably toward the latter part of the hour. You are buying into the bar that is taking out the red bar. Boom. Okay? You are putting a stop under everything here or under the bar, under the pivot here. Okay? And you are taking profits on the swing. Okay? On the swing. This will tend to be more of a stop out profit take on a break of something. We'll get to that in just a little bit. We'll get to the profit taking in just a little bit. Now, let's take a look at it on the short side. You are looking for the same things, and we're going to go to charts as soon as I cover this. Igniting events from sleepy periods down. You are diving into this hourly bar. Boom. Stop above everything, or if you want to be tighter, stop above the bar. Okay? The pullback is simply where, let's do it like this. Drop. Your stock is rallied back a little bit here. Boom, boom. And right at or near that declining 20, you get a color change, right? Boom, right there. Come into the play. Boom, stop. Above the pivot, and the rest should be history. Okay? Guys, look, what I'm trying to demonstrate for you, if I can get you, my goodness, if I can get you to stop freaking tinkering, stop believing that every single opportunity should be yours, searching all over the world for any opportunity, and if I could narrow you to two opportunities, ignitings and pullbacks. Ignitings and pullbacks. Pullbacks. Ignitings and pullbacks. If I can get you to do just that, I can truly turn you into a powerful trader. It's all about narrowing your opportunities. I told you this a long time ago, or many times I should say. My dad used to say, Oliver, stop, when I was a kid, young teenager, trying to do everything, trying to make money this way, that. My dad would say, Oliver, stop chasing every single dollar in the world. Every dollar is not yours, Oliver. You have to choose which dollars have your name on them, and then focus only on those dollars and leave the other dollars to other people, Oliver. You can't chase every dollar. You'll get nowhere doing that. Focus, son, focus. This was his dinner talk to me, right? And I tell you the same thing. Every move is not yours. And a lot of novices fall for this in the market. They see something move and think that should have been theirs. That's somebody else's dollars. That's someone else's move. You have to carve out your specialty, your move, and you sit and you wait for your specialty to come to you. This is professional trading. You decide what is your opportunity, and you demand the market give you your opportunity, or it gets none of your money. It's almost as if you tell the market, you either play my game or you get no play from me at all. And so the market says, oh, okay, well, I want play from him, so I'm going to give him ignitings. I'm going to give him pullbacks. You sit and you wait like an animal, like a predatory animal, waiting for the moment to strike. You don't chase every single wrinkle, every single move, every single ebb and flow. That's a recipe for overtrading and financial ruin. So if I can get you ignitings and pullbacks off two key areas, 220. 220 Your game will be simplified but powerful, precise precise and consistent. Okay? All right, let's go back to this. Now, I'm going to show you some hourly swing trades. These are 2-day plus trades. Some are a little bit less as well. All right, because some of the moves happen so explosively that they don't even make 2 days. All right, it's 1 day. All right, but again, on average, 2 days, 2-day plus trades, focusing on the hourly chart. Okay. Now, I want you to always look at the pair we're looking at. We're looking at the euro dollar. Remember, that's 23% of the market. This is your most dominant pair. All right? Which means that a lot of your opportunities are going to come from this pair right here, the euro dollar. All right? It's the biggest, it's the most liquid. It presents a lot of opportunity, even though I do like the dollar yen pair, which I'll show you. But okay. I want you to, the first thing you always do is look at these look at your 2 key moving averages, your 20-period moving average, your blue, and your 200. I want you to look to the left-hand side. Look at how there is a sleepy period. How do you know when your Forex pair is in a sleepy state? Well, you've got 3 items. The pair itself is sideways. The 200 is sideways. And the 20 is flat and sideways. So 200, flat and sideways. 20, relatively flat and sideways. See, this is not sideways. This is sideways. Okay? So all 3 items, you got 3 items, right? You've got the pair itself. You've got the 20. Can be a little wavy, but still. And you've got the 200. All 3 things are flat and sideways. That's the sleepy state. Now, you can have some false starts out of these sleepy states. But one of the keys to making sure you're truly coming out of a sleepy state is to make sure you're coming out of a decent block of data, not just a small block of data. All right? Now, this is clearly coming out of the sleepy state. You can try it earlier here, but I do tend to like the bar to be bigger. But that is an appropriate attempt as well. But if you require bigger, it's more certain. Okay, what I would call an elephant bar, not a regular bar. These are regular bars trying to come out. This is a regular bar trying to come out. This is your elephant hourly bar, making it certain that you are out. Boom. Now, if you can, stop below everything. All right? That's where your ideal stop should be. Under the traffic jam. This is your traffic jam. Now, I want you to look at this tendency that I spoke to you about. Igniting, pullback. So igniting play, pullback play. You see that on this pair? Here is your igniting play, followed by your pullback play. Now, if you're playing strictly a color change, your entry is right there. Boom. my traders would probably get in here off the bottoming tail bar entry. All right, that's for more deeper training. But a basic color change strategy, you're just going the first time green takes out red at or near your 20-period moving average. Okay? And the rest is history. Okay? Now, notice how your items, your 3 items start off close and then start to separate. Now your items are, all 3 items started off together. Now you separate. You must be looking to exit on the 3-finger spread or the 3-finger separation. All right? Your trades will start to get really sloppy if you continue to try to trade what I call a 3-finger wide state. What's a 3-finger wide state? 1 finger, 2nd finger, 3rd finger. All right? This is item 1, item 2, item 3, all separated apart from each other. Your best trades will come from the area or zone where they're all together, the 3 items are all together, and up to here. Look at that pocket right there. So let me show you how this might look. Igniting. Pullback. See, in that box. Do you understand the box? Not over here, people. This is profit-taking zone. Entry zone is the box. All right? When they're all 3 items are together or not that far apart. They're starting to separate, but not that far apart. Let me draw the box on this again so you get the box concept down. All 3 items together. Here's the box right there. Okay? Notice how in the box they're starting to separate, but they're still relatively close. All right? Not over here. Please stop it. Not, let me see, guys, going ahead a little bit. Not over here. This is the profit-taking box. All right? So you make sure that your entries are when they're all 3 items are relatively close together. Tell me you understand the box concept. Let me see you. I'm not moving until I see some of your comments. I'll take a sip of water in the meantime. Let me know. Let me go back to you. Let me look at your comments here. Let me know. Do you understand the box theory? You understand those are where your best trades are going to come from. Yes? Looking at your comments here. Wow, they're coming so fast I can't even see them. All right, you understand the box. Good. All right, good. Okay. Loving it. Now, we're going to test your knowledge on this at some point. See if you really are getting this. Okay. Now, I want you, the first thing you should do, take a look at your moving averages. Go to the far left-hand side of the chart. All 3 items relatively close. Anywhere in here, boom, look at that singular bar, almost like the Statue of Liberty. Stand tall above everything else. It's igniting out of the sleepy state. look at what happens shortly after. Boom, you pull back to the 20-period moving average, and boom, here is the box. Okay? Now, guys, one of the best trailing methods in your swing trading is the 20-period moving average trail along with, right? So you're going to, especially if you play off the color change off the 20, now you're going to start trailing your stop with the 20-period moving average. But you're going to combine it with pivots and big bars. You're going to combine the stop, the trailing stop, with pivots and big bars. Let me show you how that works. So you're going to say, okay, if it breaks the 20, I'm out. But also, if I get a pivot, I'm adjusting higher. I get a pivot, boom, I adjust higher. Now my stop is this pivot. What's a pivot? This is a pivot. Stop adjustment. This is a pivot, another one, stop adjustment. So pivots would be like this, pivot, 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 right? So you're climbing the pivots, right? Pivot, 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 and out, okay? That's pivot trading. That's pivot trailing stop trading. It is a very, very big money stop approach. It has problems though. The problem with just the swing, just the pivot stop, is that when you get a big swing, your stop out can give back too much gain. You see? So I don't like to just use pivots. So I use a combination. Let me show you. So it's the 20-period moving average, pivot. Your pivot will happen until the 20-period moving average passes the pivot. Now, when the 20-period moving average passes the pivot mark, you go back to the moving average. Then when you get another pivot, you see how your moving average is here, but now your pivot is higher. And now you're anchored on the pivot until the 20-period moving average improves. We need to add one more thing, big bars. So we're going to use pivots and big bars. So let me show you what a pivot and a big bar is. Here's my pivot stop. And then you see that big bar? Once that big bar occurs, I move my stop under the big bar. And whichever one happens next, if I get another big bar, I go under the big bar. If I get another pivot, I go under the pivot. Pivot. Now, see that big bar? I jam my stop under the big bar. What's next? Pivot. What's next? Big bar. What's next? What? And all the while, my 20 is trailing, my 20 is trailing, my 20 is trailing. Now, I don't get another pivot. I don't get another pivot, but my 20 passes my stop on the big bar. So now I'm back to 20, back to 20, back to 20 until I get this pivot. Now I'm pivot, 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 pivot out. So basically, guys, what you're doing is you're rolling from whichever one improves the stop more. Do you understand? Whichever one improves the stop more. All right? If it's the 20, that's the higher stop, it's the 20. Then if you get a pivot that's the higher stop, you move it to the pivot. Then if the big bar is the higher stop, you move it to the big bar. And if the 20 catches up, now you move it back to the 20. And you rotate whichever stop is higher. All right? You just improve on whichever one comes next until you are out of the trade. That's how you ride professionally, people. It's powerful. It's crazy. Get this light fixed here in a second. All right, I need to see it again. Guys, I need to see it again. Let me know if you got the rolling stop adjustments. It's a very, very professional approach. Let me know. I want to see your comments. I want to make sure you're still with me. You're not falling asleep. Why is this? Let me know. I want to see your comments. You got the rolling. You know how to roll from one to the other like a freaking pro? You know how to do it like a freaking pro? Right. Big bar 20 pivot. Pivot 20 big bar. Pivot 20 big bar. Pivot 20 big bar. Pivot 20 big bar. Wow. If I can get you to do that, you will be riding profits for days. All right. Picking up when I'm laying down? Good. Good. Okay. All right, guys, let's get back to this. Still love this. So freaking amazing. All right. Second here. All right. Now, I want you to, I know you can do this. Look to the more left, sort of toward the left-hand side of the chart. Look at where there is this sleepy sideways movement and a tall bar just pokes itself out of this sleepy sort of sideways movement. I want you to find it. Find it for me. Find it. All right, you got it? Okay. Now I'm hoping that you identified this on the 10th. Boom. Entering that bar. Okay? Beautiful. I do want to speak to this. Relatively close together is fine. Look at all my items. Here's the 20. Here's the item. Here's the Forex. Here's the Forex pair. Here's the 200. This is relatively close. It's not this. It's not this. See? The 3-finger spread. Way up there, here, and there. So don't demand that they be touching each other. Just relatively close. It's very important. All right? Now, you don't have to ignite off the 200. You can ignite off the 20. Remember I told you that? Sometimes your stock is going to drift back toward the 20 and ignite off or near the 20. Look at this. You're igniting. This is the 20-period moving average here. You don't have to be touching it, just near it. And there's your hourly bar that you hit. You hit this up. Boom. Stop under everything or under the bar if you want it tighter. Okay? Now you know when you start getting this 3-finger spread here, it's time to go. All right, this is a 2 spread, but you got the 3 fingers now spread apart from each other. It's time to kill this trade. Now, but while you're getting there, remember, 20-period moving average, big bar, big bar, big bar, okay? Right, any bar that's big, get that stop under the big bars. Get those stops under the big bars. Boom, 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 boom. Okay? Ride that thing out. All right. Take a look at another one here. Here's the pullback trade. You can pull back. Let me show you this. You can pull back off of a 20, boom, like that. You can pull back off of a 200 like this. So a lot of times the way you do a pullback on the 200 is that it comes from below the 200 first. So it comes from below the 200, then pulls back, and boom, ignites off the 200 for a nice trade. So here's the 20 pullback, and here's the 200 pullback. In this case, you've got the 200 pullback right there. Boom! Green takes out red, and the rest is history. Your stop is under the pivot. Remember, when you're pivot trading, your stop is under the pivot or pullback trading. Then big bar. You see the big bar? Then another big bar. Now your 20 catches up to the big bar, big bar, big bar. You don't get another big bar. You don't get another big bar. Maybe you're out here, or maybe you decide to take profits there. It depends. I am less concerned with what you do here than what you do here. Right? You know why? I am more concerned what you do here than what you do here. This is profit taking. But I am more concerned with you getting in properly and protecting yourself properly. Whether you make $1 million or $900,000 makes no difference to me. Whether you got in properly and protected yourself properly is like, that's 85% of the game right there. Getting in properly and protecting yourself properly in the event it doesn't work. All right? That's where I need you to be the most careful. You can throw darts, roll bones, call the psychic hotline. Should I take my money off the table now? I really don't care as much because you're already rich. All right? But it's when you're not rich and you're starting the process. That's where I really want you to be sharp. I really need your entries properly. Are you taking ignitings? Are you taking pullbacks properly? Are you protecting yourself from the 2 out of 10 that will not work? All right? 2 out of 10 are not going to work. Sometimes 3 out of 10. So 2 to 3 out of 10 they're not going to work. That's why we have stops in the first place. But the ones that do, OMG. And the ones that you ride out properly, pivot, big bar, moving average. Pivot, big bar, moving average. The ones you let run with that professional style approach, wow. Think about what I'm doing here for you guys. I'm narrowing your world to 6 trading items. I'm narrowing how you mine money from the 6 with 2 events, ignitings and pullbacks. And I'm teaching you how to milk them, to milk those ignitings and pullbacks for maximum profitability with pivots, big bar, moving average. Pivot, big bar, moving average. Do you understand how few people in the world have their trading that concise, that compact, that orderly, that systematic? Very few people. You know what most people are doing? They're in chat rooms talking with other no-knowledge bozos, watching news, listening to Jim Cramer. That's what they're doing, ruining their family's money. All right? Taking tips from strangers on the internet. But this, knowing the 6 things that you trade, knowing the time frame you traded on, knowing which moving averages are the most reliable, understanding the states that those moving averages communicate, knowing the 2 events that produce the most fluid gains, ignitings and pullbacks, knowing how to enter them and protect yourself and how to maximize them with pivots, big bar, moving average combination for maximum gain. That's A to Z, people. It leaves no stone unturned. It's very powerful. And with a style that you can relax with. Every bar is a full hour. Think about that. And when you're trading the 4-hour chart, every bar is 4 hours. You can go to sleep, take a nap, and the bar is still moving. The same bar is still moving. Your stop's there to protect you. All right? It's not this frenetic style. It's more relaxed, cool, calm, collective. Let it flow, baby. Wow. All right. Now, look at the US dollar, dollar CAD, right? This is the US dollar Canadian dollar pair. And guys, look, you get the color change. Look at this color change. You get his pullback, right? And you, the first time red eliminates green at or near the 20-period moving average is there. Boom. Here, we drift back. Red eliminates green right off the 20-period moving average. Now, this one still worked. It's a little wide, though. You understand? Remember that box. See how we're relatively close together. All right, these two definitely. This one, it's low risk, but this is your sweet spot. See? All items are relatively close here. Up to here, they can start to separate, just not a lot. Now you start to you're going to get sloppy here. All right, that's too deep. This is a little bit too deep into the trend to get the same consistency. Okay? So always just think, guys, think this. Look, I'll just draw it for you. Think that. So think where you want your opportunities. Pick where you want your opportunities. Right there. Okay? Ignitings and pullbacks in that box. Ignitings and pullbacks in that box. Boom. Boom. Okay, good. Now, find the igniting. I know you can do this. I know you can do this. Now, here's an example, guys, of why you want to always play the latter part of your hourly bar. Because look at how quickly you did an igniting up first, but quickly eliminated that. If you did that too early, you would have gotten caught, right? So if you come in the last 15 minutes, the last 20 minutes of your hourly bar, boom, you know it's real. It's not the first 2 minutes and you got 58 minutes left to change things. Boom. Stop if you like. All right. Boom. Color change. Remember, you drift back. You don't have to touch it. You just have to come back to it. Remember, guys, moving averages are zones anyway. They're not skinny lines as the platform would have you believe. These are zones. So anywhere near is appropriate. Boom! So there are two plays here, right? There's the igniting. Boom! And there's the color change a little closer to the 20-period moving average. It's a beautiful thing, and the rest is history. Look at your 3-finger spread. Now, see it? Let me do it. Let me make this clearer. All three items are nowhere near each other now. 3-finger spread. You should be really thinking about coming out of that trade. Look at how close they were together here, all three items. This is simplifying professional trading, guys, from a technical standpoint. Okay? Pull back, look, drop, we drift back toward the 20 and color change. Boom. Stop. The rest is history. So think about this. These are your events. I'm gonna draw all your events. Draw the other one. Take a snapshot of this after I finish drawing. Okay. Right? These are all your events, right? All right, so I'm going to put a dot where right? Now remember the sideways ones. And the sideways ones, don't forget the sideways ones, right? Where you get these. Okay? All right, so you get those sideways, those drifts. You can pull back to the 20 or drift back to the 20. Okay? And there's one other I would throw in here, which you see, which is really more 200 based, where you come from below or above. So you come from below the two and boom, like that, and the vice versa of that. And I'll do it for you here. I think I have some room here where you're 200 and you kind of right there. That's almost like this, where it's almost, this one is almost like this and this. So it's like this. Let me draw it for you. Look at this upper right one, right? Where you see that? You're dropping below the 200. Drifting back toward both the 200 and the 20. And color change, boom! That's that right there. Powerful. Guys, these are your events. These are your events. One, let's do the long ones. 2, 3, and 4. These are all long ones. And then the short ones are A, B. Let me take this out. Okay. C, and D. 4 longs and 4 shorts. Hourly chart, 6 trading pairs. You know where to put your stops. You know how to trail out for maximum gains. Go to 6 pairs and mine swing trading profits utilizing these 4 longs and 4 shorts. You're going to mine dollars from 6 items. And it's going to work. I promise you, it is going to work. You see it working. Take a snapshot of this. I'm about to get rid of it. Take your phone out, take a snapshot, or take an image clipping device or platform or whatever. This is how you're going to mine dollars from 6 things. Swing trading. Look at this. Look at the igniting off the 200. Well, you had one here too. Okay. Oh, by the way, guys, stop out should be 2 bars. So you see how, like, if you had your stop under this, under everything here, you broke the 200 here, but you didn't break it on the second bar. Your stops should be 2 bar stops, not 1 bar peekaboos. Okay? Not 1 bar peekaboos. Remember that. 2 bar stops. You need a 2 bar violation of something, not a 1 bar with this. All right? 1 bar is called a peekaboo. 2 bar violation is your stop. Okay? Good. 3-finger spread. So you could have guys gotten stopped out here. I mean, if you did that pull back play with the stop here, you got violated, but it is kind of 2 bars, but still, I'm okay if you get violated here. You got to come back. Boom. Don't give up these surges off of these key points here. And then you get your 3-finger spread move. It's beautiful. Nothing wrong with getting stopped out. Stopped outs are good. Stop outs are good. Okay, remember I told you that one of your buys is when your 200, remember one of the 4 buys is your 200, your item comes from under the 200, then pulls back and ignites. Look at that. You're under the 200. Make this a little thicker. Under, you pull back, and it ignites. It's beautiful. Okay? And if you're doing strict color change, there's one color change, there's another color change. Here's your pullback. Boom. You know the deal now. There's another pullback. That's fine. Now you've got the 3-finger spread. Quite nice. You want to be getting the heck out of Dodge up there. Okay? You know the pivot stop. Big bar, pivot stop, big bar. And you can start bar by barring once you get the 3-finger spread and out. Boom. Simple, but very powerful. Guys, I find that a lot of people assume that something must be complex for it to work in the market because the market is complex. Both of these premises are wrong, erroneous. The market is not complex. It has three movements, up, down, sideways. That's not a complex system. Okay, you make it complex. You bring complexity to the market. You bring confusion. You bring lack of discipline. You bring no plan. As if, let's go on vacation with no plan, no destination, no anything. Like you bring that stupidity. You bring the lack of the ability to do what you say you're going to do. You bring not keeping your stop. You bring holding on to profits too long after three-finger spreads. You bring buying too late after it's obvious and it's already way past the key moving averages. You bring all of these things. You make it difficult. You make it complex. You make it hard. You create the high failure rate in this business. The market doesn't do it. The market is neutral. It trades the same for me as it does for you, as it does for Warren Buffett. It doesn't trade any differently for anyone. It's the neutral item in the bunch. Yet everyone gets different results because everyone is bringing something different to the market. And I'm telling you, I've given you here what to bring to the market. 4 buys, 4 shorts, 6 items, 1 time frame, hourly. 2 types of plays, ignitings, pullbacks. You know how to protect yourself and how to ride them out for maximum profitability. There is really nothing else except practicing it and getting it down to the point where it becomes unconscious competence, where you don't have to think about how you put one foot in front of the other to walk to the refrigerator. There's no mental processes going on that you are aware of anymore because that act is now unconscious. You're competent without needing to be conscious. You need to practice. You need to do this and gain enough experience with it that it becomes second nature. That's all that's left. There's really not much more left. And guidance and mentorship and constant reminding and training with the market live does speed up that process enormously. But that's all that's needed. It's not much to fill in here. And you don't need more things. You don't need more indicators. Novice mindset. You don't need another book. You don't need another indicator, another platform. You don't need another tactic. You don't need another item to trade. You know, this idea that you need more will keep you like chasing your tail your whole career. You need to dig in and stick to something sound for a while without adding and subtracting to it. All right. We're almost finished here because I'm starting to get bored. This is so repetitive, but this is the key. You want it to be repetitive. Trading should be boring. It shouldn't be exciting. You want excitement? Go to Disneyland. It should be boring. It should be the same shit over and over again. Same thing over and over again. Boom. Pull back. Boom. Igniting off the 20. Boom. 3-finger spread. Getting the heck out of Dodge. Trailing. Pivot. Big bar. Pivot. Big bar. 3-finger spread. Bar by bar. Out. Boom. That's your 3-finger spread up there. 2 plays. Igniting when everything is narrow. Pull back. Another igniting. Trail. Out. You'll be elite with this. I'm telling you. Igniting. Boom. Stop. The rest is history. No pullback here, though. Don't get trapped with these temporary wicks. Get into the bar in the latter part of the hour so that you're sure it is going to end like that bar. Okay? Don't get in too early. Igniting. Pull back. Boom. Pull back. Boom. 3 fingers spread. Out. You know how to trail. Big bar. Bar by bar. Once you get elevated, guys, don't play around. Tighten up. Powerful. Pull back. Boom. All right. Got several here. Couple here. Some of these are very low risk. Enter, stop. Enter, stop. Look at your risk and look at your reward. Now, how many of these risk units fit inside of there? That's how you professionally trade. Keeping that risk unit small. You can do this, traders. I am telling you, anyone can do this. I know that it is my responsibility to tell you that trading has a high failure rate, and it does. But I am telling you, it is not because it's rocket science. It is because most people fail to do it correctly and do what they're supposed to do. Most people are showing up to a gunfight with no money, with no knife. First of all, they're showing up to a gunfight not even with a gun. They don't even have a knife. Inappropriate amounts of capital do not win in this business, guys. This is a money game. I'm sorry. You cannot do this with a small amount of capital. This is why I provide capital to my traders. Because you can be good and still show up in the market. You can still be good at fighting, but the other opponent has a machine gun and you have nothing. You have a toothpick. You can be as good as you want. You're going to lose. Currency, money is required to make money in this business. This is why I provide the capital. I also provide the capital, traders, because most traders are stupid with their own money, but they're smarter if it's someone else's money. You're smarter with my money. You're more careful with my money. You're more disciplined with my money than you are with your money. This is why billionaire hedge fund managers and owners get other billions into their own fund to trade. You think it's because these billionaires need their money? No. It's because they're held to a higher standard when they mix their money with other billionaires' money. It holds you to a higher standard. You just trade better. You trade better when it's not yours. You're more careful when it's not yours. And that's the secret on Wall Street. They're never using all of their own money. Never. No, they're better if it's not with just their money. Okay? But you can do this. It's not rocket science. What makes the high failure rate is a variety of things. Inappropriate amount of capital, no training, no systematic approach, no method, no discipline, and no guidance. The top performers of anything in the world have guidance all the time, coaches, mentors. They're the elite and they still have coaches and mentors. Why? You think that's just for show? No, it works. There's no Wall Street trader that comes into a Wall Street firm and is left alone and they tell them, I know this is day one, so go knock your, here's $100 million, go knock yourself out. No, they've got guidance. They've got head traders. Every day. That's how you make it in this business, guys. That's how you make it in this business. So you can do this. Guys, Bill Deichler has been in my life since the year 2020, I believe, or 1999 or 2000, not 2020, 2000, a long time. So 25 plus years, 25 years. And he's become one of my top Forex experts. And I called on him to help direct this Forex division of ours. And we're several thousand traders strong, spread all over the world, and getting stronger and stronger. And our marrying the income and the swing/wealth styles all in one has been a huge, huge success for us. And it's becoming even a bigger and bigger success. For some of you, I believe that joining this team with Bill, Dr. Dan, and me will be a very big blessing for you. Now, there are 3 ways to join our swing trading team where you get full funding and guidance on your trading, training on your trading forever. This is a lifelong program. It has no expiration. You stay on the team as long as your heart desires. All right? So there's the swing prop program and the swing trading camp. Okay? The swing trading camp is an 11-week program where it's very, very intense. It incorporates a lot of live trading together. All right? That is what ultimately every Forex swing trader will need. But the main core item is the swing prop, which is the actual program. Live trading every single day, guidance every single day, weekly educational sessions, a fully funded account, all right, after graduation, 40% payout. We can improve on that as well, but a 40% payout. And the Swing Trading Camp is a separate 11-week program that is very, very intensely focused on specific tactics and a lot of live trading under guidance there. All right. Now, the package incorporates them both. Now, you can enter the family by doing one, the prop program, or the other, or both with the package. Okay? That's the one that obviously is the most popular. And there is nothing else to do. All right? These 2 things are the only 2 things that are required from our traders. Now, the cost from a retail perspective is $4,000 for everything, guys. This is a one-time shot, and this is for life. All right? Training for life, weekly sessions for life, breakout sessions for life, Saturday training sessions. We train on Saturdays too. All right, for life. All right, funding for life. All right. Now, a la carte, it's $2,500 retail on the entire funded account program and the 11-week intense trading camp. That's $1,500. Or together it's $4,000. These are retail prices. Now, I do have a very special price for you that's a lot less than this. Okay? Now, I want to tell you a little bit about what's included here. There's 10 hours of on-demand training that you must get through right? This is where you'll, just like we went over things today, this is going to do deep dives on everything, every component of the trade, from profit taking to proper entries to all of the specific events that you take to the proper indicators, the moving averages, the time of days that are the best time of days to cover all in 19 educational sectional modules. It's 10 hours to complete. This will cover the foundation of everything we do. And you have access to this and can repeat it over and over and over again. This is also accompanied by a 280 plus page training manual that details all the specific things from A to Z. Okay? You'll also have daily live trading and training room. You'll watch traders taking trades live. You'll mimic some of those trades. You'll copy some of those trades. You'll have your trades critiqued, monitored, all your questions answered, guided during the live trading periods. Every single day, guys, every single day. All right, this is not you being alone. This is you being constantly under the guidance of a professional trading team. Weekly live study sessions. All right, we do live study sessions every day. This is sort of like a live study session I did with you today, but this happens weekly for our traders. Enjoy new live trade every single week. Each session is recorded in case you can't make it. You will also have access to every single live educational session we have ever done. Hours upon hours upon hours of all the past live study sessions. All right, all prior archive study sessions. All right, review. This is priceless education and training. So you miss nothing from the past. You also get everything from the current and the future. All right, professional trading platform. I think we have one of the best trading platforms in the Forex community. It's sleek, it's intuitive, user-friendly, robust features, a lot of automated trading capabilities, automated stop outs and things like that, because it is swing trading and sometimes you might stop out when you are asleep or what have you with an overnight trade. All right, so we have a very robust trading platform that can handle all of that. All right, so these are relatively new to our swing trading program. I think they're powerful. We've added Saturday study sessions. All right, so sometimes you just need the week to be over and you're a little fresher, you're a little clearer minded on Saturday to sit down, prep, get yourself tightened up for the next week of trading. Of course, daily trading room recasts. You never miss a moment. So you might not be able to be with us live daily on one particular day. That is still, you're still able to experience it via the recast. So you miss absolutely nothing. All of our traders are put through this graduation program. There's one level of training. All you have to do is get past the training to get fully funded. You're starting off with a $50,000 in buying power. You produce a $3,000 net profit net of all expenses, like, your trading fees and so forth and so on. Then you graduate. And this $50,000 buying power starts off real. Initially, you get 40%. I'm going to improve on that for you right now. But you get, because you are not putting any capital on the line, your family is not risking anything here in terms of your trading. I am taking 100% of the risk, all right? In its normal setting, I get 60%, you get 40%. I'm going to improve on that for you. But the goal is, traders, is to get through levels 1 and 2, and levels 3 and 4 is where really some serious money can be made, where you got $375,000 to $750,000 in buying power, and you can start moving some size in the most liquid market in the world. Now, I can't give my my equity traders this amount this quickly because it's a different market. But because we're dealing with a higher liquidity market, I can give my Forex traders access to a higher amount of capital faster. All right? All right. And remember, guys, you risk no capital here. I know there's an educational fee. All right. It still is a business. All right. Got to pay your trainers, pay your professional traders who will only spend time with you that way. Train you, get yourself in tip-top, get you in tip-top shape. Review your trading. Monitor what you're doing. Make corrections to your mistakes. It is a business, but it's a very, very small cost. All right. And it's a one-time cost for life. Now, these are the prices that I'm going to offer you today. All right. So for less than $1,800, all right, you have everything you need, full funding for life, full education and training for life, including the intense 11-week live trading focused swing trading camp. All right. I strongly encourage, guys, this is really like a family dinner with a couple of bottles of wine and you're done. With the possibility of doing an activity that can get you $1,800 or more per trade. Swing trades typically average much more than the entire cost for everything. Right? Very, very powerful. Very powerful. Now, here's the 48-hour bonus. I like to reward people who absolutely know right off the bat, this is where I want to be. I have found home. This resonates with me. Boom. This is your reward for feeling that way, for believing that way, and believing in me. The $4,000 swing prop program, I'm going to give you 60% of the payout, not 40% of the payout. I'm also developing a swing trading academy library that is almost complete. Guys, you will have months and months and months and months and months of valuable training available to you on every conceivable aspect of proper trading. And this library this academy or library grows every single week and becomes more and more powerful and more valuable. Here. Let me know if I'm back here. Guys, am I back? I think I'm back, right? Am I back? Did you get me? Yeah? I'm back. I'm back here. There we go. Good. Good? All right, guys. Good. Everything good? I'm back. Okay, good. So, sorry about that, guys. Sorry about that. I disconnected. I think I heard. So, guys, look. So, if you're willing to commit, join the family, join us, join me for life, this lifelong program. I'm going to give you, if you're willing to do this in the next 48 hours, I'm going to give you every single thing that the program involves. The swing trading camp, the full funded account, all the training every single day, the breakout sessions, the Saturday studies, everything. You're going to get that. You're going to get 60% of the payouts, not 40% of the payouts, right? You're going to get access to this library that grows in power and importance every single day. Hours, weeks, months of very, very, what I consider to be priceless training, education, and information. And I'm going to make sure you get off to a powerful start. I'm going to have a semi-private study session with all of you who come on board. I'm going to send you off. We're going to spend a couple of hours. I'm going to make sure you start off in the most powerful way to give yourself the best odds of coming out of the blocks. I'm going to take you myself. Okay? All of this for $1,800. Guys, it's a dinner with your family. With all your family members, a couple bottles of wine, and that's perishable. This is not perishable. I want you to understand that the average P&L from a single swing trade is bigger than this. A single one. And this is for life. For life. All right? Break this cost over 2 years, 3 years, even 1 year. It's pennies. All right? One up to a couple swing trades takes care of this. It's crazy. All right? Now, if you really know what you want, if you really understand this, and say, Oliver, I don't need 2 days to think about this. I'm ready. I'm going to give you something extra. I'm going to give you all of what I just mentioned. The package, the trading camp, the never-ending live trading, education, training, the 60% payout. I'm going to give you access to this growing academy that grows in power and importance every single week forever. I'm going to give you that study session with me, but I'm also going to give you 1 week of private mentorship with Bill. All right, and semi-private, actually. All right, this is a $500 value, but I just want to make sure that you get the best possible start and you come out of the block strong. So that study session with me and this 1 special week of dedicated focus to you in the form of a semi-private mentorship to make sure you get off to a good start and boom, come out of the blocks with power and force. All right? All of that, $17.95 for everything. Now remember, you can do it a la carte, but this is the most popular way to come in. Again, guys, this is smaller than the average swing trading gain. And so also, this is for life. Your funding is for life, and your training is for life. And your funding can continuously grow bigger and bigger with every level achieved. All right? I can't be everywhere. A lot of people ask me, Oliver, why is it that you do fund traders or whatever? Because I can't be everywhere. I can't catch every igniting item. I might be trading Apple, but an igniting item might be happening in the the yen dollar pair. I'm not there, but you're there. You know, you might be, while you're trading the euro dollar pair on a pullback event, tight stop, I'm taking an opportunity somewhere else. This way, by spreading out our money over different markets and different players and different items in different markets, we can grab everything as a team. I can grab the opportunities in Apple, I can grab the opportunities in Meta, I can grab the opportunities in the stocks I trade. While you're grabbing the opportunities in this pair, someone else is grabbing the opportunity happening in this pair, and we miss nothing. I can't be everywhere at the same time unless I do it through you. So our goal here is to really have to train like-minded traders in these different styles where your trading is just like my trading, and to send this small army out into the markets all over the world, into different markets, so that none of these opportunities are missed. That's the grand plan, and it's working. And it's working. And we want you to be part of that. We want you to be part of that family, guys. All right? The funding is there for you. The training and the guidance is there for you. Those are the things that typically prevent this success from happening. Lack of capital, lack of training, and guidance. We're providing it all for you. So if you feel like this is what you've been waiting for, if you feel like I at least have to give it an opportunity, this is the lowest cost way to give it an opportunity, guys. You can't lose more than $1,800. Think about that. That's your stop. That's your one bar stop for life. And I promise you, the value you will get for this small fee will be priceless. So, you've got 60 minutes starting now, guys. So what is it? What are we now? Roughly 12:15. No, 12:30, sorry. We're almost 12:30 Eastern time. So I'm going to give you until 1:30 for the 1 hour quick action bonus. You've got 48 hours for this version, 60 minutes for this version. Okay? And I want you to make sure that you are dealing only with someone on this list. Do you understand? No one else. There are a lot of people who are listening to this event right now that are going to try to convince you that they're part of my organization, and they're not. So you need to make sure that it's one of these people and no one else. Their numbers are here. Their emails are there. Do not email anyone else. Do not call or deal with someone with a different number and certainly a different name. You've got the languages, all right? This program is in English, Spanish, and Portuguese, so language is not a problem. Okay? You can do this, guys. You can do this. Now, I did tell you that whether you joined my family or not, that I would do my best to leave something behind, something with you that you can actually still utilize for the rest of your trading life. I hope I've lived up to that promise. All right? Starting Monday, I believe that what we've covered here today can help you see the markets different in a deeper way and can add more precision and consistency to what you're doing in the markets, irrespective of the market that you trade. All right? I'm truly glad, I'm truly thankful that you have decided to spend a couple of hours of your valuable Saturday with me. It's not something that I take lightly. So thank you very much. Thank you for attending. Thank you for lasting all the way to the end. I want to also thank and welcome those in advance. We're going to be new members of our family. We're going to have an amazing year. That I promise you. All right? If I failed in any way, I promise I'm going to get better and better at these every single time I'm in front of you. So ciao for now, and I'm looking forward to seeing you join the family. All right? Ciao for now. Boom! Boom! Boom!